Alrighty, good evening. Just a quick mic check.
Alright, good
Oops,
evening.
sorry. Feedback. Okay, obviously the mic is working then. Alright, yes, we're hearing clearly. Can somebody just confirm for me, please, while we wait on others to join? Alright, perfect. Thank you, thank you, thank you. Alright, nice. Bueno. Alright, hi everyone. So, my name is Whitney, for those who do not know, and I'll be taking you through the next 2 hours with some questions. We're not doing a full past paper, like just a straight paper. We're doing different questions from different papers based on what you guys would have submitted in the questionnaire to indicate that you are having most of your challenges with. If at any point during the session you're unable to hear me clearly, please let me know. Oh, as you can see, that camera thing, yeah, my camera is off. I cannot turn off this thing on YouTube, but my camera thingy is off, so that's why it looks like that. Yes. I'm not camera ready right now, unfortunately. But if at any point you guys cannot hear me clearly, please indicate in the chat. I will be monitoring the chat as we go through. If you guys have any questions, please do drop them in the chat as well. If it's you realize I probably I keep going and for a while and you realize that maybe I would have missed your question, especially if there's a lot of questions coming in. If I missed it, it's okay for you to send it again. All right. And just stay tuned, guys. Be attentive, pay attention, and get rid of all the distractions now because we'll be learning. Do not have the mentality that, oh, I can watch the video afterwards. No, you're live now, so make the most of it now, where you'll be able to get your clarifications now. All right, so let's jump in. Let me get my screen sharing. Hmm, okay, I'm going to need an Excel to work with for the solutions. All right. All right, you should be seeing my screen now. All right, so I realize a lot of you indicated manufacturing account as an area of concern. So we're going to start with the manufacturing question. I tried to pull the questions from very recent past papers, and as we can see, if you guys should really analyze the past papers from a couple years back to more recent years, you'll realize how much they're changing to a certain extent with how the questions are presented. To me, I would say straight out, some of the questions have become harder because topics that were not previously focused on in in the past. They're bringing more of those now. So yeah, since the topics that we would consider, well, in a really compound exam, like budgeting, for example, we're seeing more of those questions, and even with costing under manufacturing and cost control, there is this costing absorption thingy. I think last year they got a not last year. There's a year that the year before they got a question that was very yeah. So the less popular topics are becoming more popular now. So I would say try to familiarize yourself with the entire syllabus as best as possible. Yeah. And just use most recent past papers rather than the older ones so you can have an idea of where CXC is at now. Because things keep changing and the syllabus may change soon. I'm expecting. Well, but anyways, let's go. You guys don't need to worry about any changes. Work with your current syllabus. And please study with your syllabus too. I know sometimes we just take out the past papers, but study with your syllabus to know what you should know because that's what your teachers taught from. And I know that some persons may not complete the syllabus. Yeah, you may not get the chance to complete it. Yeah. So look at what you should know, and if you realize any topic in the syllabus that your teacher haven't been able to complete, then you try to seek additional resources and assistance beforehand so you can go in the exam as prepared as possible. No, yeah, all right, enough chatting time. Giving some more persons some time to join, but let's get into it now. So we have this question on screen here. Always read your questions. If even the one little sentence at the top, do not take it for granted, guys, because sometimes you have certain key information that may seem small, but it's actually very key and may be hidden in the question that you take, in the top part of the question that you take for granted. So we have the following information here is available for Chevron Manufacturing Company. You see, they gave us all of these raw material inventory, work in process inventory, finished goods inventory. They gave us at May 22, May 1st, 2022. And if you look at the bottom, you'll see that same thing again at April 30, 2023. You need to pay attention to the year end. In accounts, dates are very important. A date can be the difference between a correct answer and an incorrect answer just because you didn't pay attention to the dates. If your screen is blank, okay, somebody says seem okay. I guess others are seen. So if your screen is blank, you can probably just come out and come back in. Seems like others are seen, and I have a next device here to monitor the chat, and I'm seeing the screen still as well. So try to come out and come back. All right, so pay attention to your dates overall in accounts. It's not topic related, it's just overall. You have to pay attention to your dates, they make a difference. Now, you have the rest of the information here for the year ended. See there? They tell us the year ended. For the year ended April 30, 2023. So that means this information at May 1st, 2022 would be our opening or beginning information or information at the beginning of the year, right? And anything at April 30, 2023 would be the information at the end of the year. So our year would have started May 1st, 2022 and ended April 30, 2023. So we'll come back to all of this. Let's go into the requirements of the question. So when you get a question, right, you pull up this paper, you reach question 3, and you see manufacturing account. You don't need to spend time reading through all of this. Skip to the bottom to see what is required of you so you can at least have an idea of what you will be required to do. So you can mentally start prepare yourself. So these are requirements. We're going to identify 2 examples of direct cost. Easy 2 marks question. These are the easy theoretical marks questions right here. The big part of the question, what are they asking? They want us for the year ended April 30, 2023. We should prepare the manufacturing accounts, and they said to show all of these things clearly. Yeah, If the question is asking to show all these things clearly, please do not leave them out. Show them clearly. Label your line items as you go along when you're preparing your statement. Don't take those things for granted. And we're going to calculate net sales. So, all right, not a bad question. You will get 5 questions on your paper. 5 questions with me, 1, 2, 3, 4, 5. 5 main questions, and of course, as you can see here, they will be broken out, right? So you can have a part A, you even have AII, etc. So not 5 questions as 1, 2, 3, 4, 5 quantity, but 5 main questions. Each will be 20 marks, and your paper is marked as 100. Cool? All right. In the past, I would have said the questions shouldn't be related. Yes. Let me see. Let me pull up a reference. Do I have it open? I don't think I have it open. But in the past, I would have said, oh, questions 1, 2, 3, 4, and 5 would be unrelated, right? But last year, there was a surprise. Last year, June, let me find back that paper. June 2025. I think it was questions 2 and 3. Let me just double check though. All right, question 2 was a big company question, by the way. Please don't take the topic companies for granted. I know it's sometimes one of those topics that we don't really understand or it's more difficult for us. Please put the relevant effort in that one. So we have Amazona company, question 2. And they asked us to present. Let me just check. I'm not sharing it, I'm just checking. Just to double check my facts before I complete my statement. So they wanted the income statement for the company. Usually takes in an ask for them something there. This is more, it was even keep. I'm not lying, it was even keep. Yeah, they wanted the appropriation account. This was a big company question. I've never seen a company question so big before. Like the entire question, the 20 marks, was on a company question. 11 marks for the income statement for the company, and 9 marks for the appropriation account for the company. And then on question 3, no, for question 3, they literally say this question is to be answered using the data provided in the trial balance extract for the Amazona Company Limited on page 10, and your completed answers for question 2. Yeah, usually the 5 questions would be unrelated, guys, but last year this was a surprise. Question 2 was a big company question that I would expect to see in CAPE, not in CSEC, to be very honest. And then question 3 was related to question 2. So if you don't even know the question 2, God bless. I didn't like that though, because like, why would you do that? But as I said, things are changing and we can only prepare as best as possible. Oh, please use pen. Please use pen, guys. Please use a pen. And what some students try to do is to start with a pencil if they're unsure and trace it over with the pen and then try to erase it after. That is double time, double work. Accounts is 3 hours and it sounds a lot. Yeah, it's not like enough time, right? But it really isn't. It really is not. I almost barely finished mine when I did mine. Mine was a couple years back. And to me, the paper was hard at the time. It wasn't easy, but looking back, it never that bad. But yeah, practice with your pen. For since you have a couple time now left, couple weeks before the exam, I would suggest when you're practicing, because a lot of us would have practiced with pencils, right? In classes, and so we're practicing with the pencil, so we're used to the pencil. Train yourself. You have time to train yourself to use the pen. And if you make a mistake, just one line through it. One line. No cross up to something. Just put a line through it, and you will have space at the top to even write the correct thing. But practice using your pens, please. Please, please, please. All right. So let's get started on this one. Easy, 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 easy. Identify 2 examples of direct cost used in manufacturing. of the product. Easy, 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 easy. Please, your answer is literally in the table right here. Literally. Pick it from the table, right? So this is a 2023 paper. I will drop the solutions, this document that I'm doing, I will drop it in the groups in the study hub group when I'm finished. So if you are on and you're not a part of that group, you can reach out to us to be added to the group. Our details is going to be in the description of this video where you can contact us. All right. Siobhan Manufacturing. Cool. AI. This is CSEC, guys. So two examples of direct cost. So our direct cost typically consists of our direct materials, or direct labor, as well as any other direct cost. So specific to this question, our direct cost, we have raw materials. Realize that we have raw materials, see, raw materials, inventory, they even purchase new raw materials. Those are direct costs. So your raw materials is direct materials, right? Just put in bracket. Materials. Hello, ignore any spelling error. It's not English class. Yeah. Ignore my typos, please. We also have direct labor. So here we go. We have factory wages. You don't see the exact word direct labor, right? But we do have it because look, factory wages. We have 60% of the factory wages are direct. That was a giveaway. Yeah. So direct labor. Let me just make it known. It is the factory wages, the direct portion of the factory wages. And we also have other direct expenses such as royalties. Royalties is what we consider other direct expense. I gave you three, the question answer two, right? Yeah, the question answer two. All you need to do is list it. You don't need to explain anything. They said identify two. Just write one, two marks, and you're good. Don't need to explain anything. It just has to identify. It didn't say discuss, it didn't say explain, it just identify. Next question. I identify three examples of indirect costs used in manufacturing of the product. Don't put random indirect costs out of your head that you studied and taught for the exam. Pick it out of the question, guys. Go to the question. You don't need to sit and baffle about it. It's in the question. So, indirect cost. Let's see what we find here. All right, we have rates and insurance. Rates and insurance is an indirect cost because it is not directly related to the production of the item. It's not directly traceable to it. So our direct costs are typically costs that you can use them at the same word directly trace to the product. So your raw materials, for example, if we're making a shirt, direct material would be the fabric. Without the fabric, there's no shirt, and you can actually directly assign or calculate the cost of the material that is associated with the total cost of the shirt, for example. Those are direct costs. They're directly associated with the product. They're directly traceable to the product. Indirect cost now, they will still be a part of the production costing, but they're not directly traceable to the product. So, for example, something like the rates and insurance, you can't say, oh, this particular product that was manufactured yesterday used up 15% of our insurance. No, you cannot say, no, it doesn't work like that. So, in that case, it would be considered an indirect cost. Which part past paper booklet are we referencing, guys? Do we have a past paper booklet? If you guys reference to the drive, it should be. This is 2022, 23. If you guys don't find it, you can just let me know and I will double check and add it. Oh, sorry. So we have rates and insurance. We have general expenses as well. Let me point out where I got this one from. Here we go. General expense. General expense. They said here that some of it is for the office. The portion that's for the office, we're not concerned with that when we're doing the manufacturing account. Because manufacturing account, you're looking at your product cost, and your product cost consists of costs that are associated with making the product, costs associated with the factory, the plant where the product is being made. It can be directly traceable or it can be indirectly traceable. So your product cost makes up that it consists of direct cost and indirect cost. If it's associated with the office, for example, that's what we call a period cost, and we don't put that in the manufacturing account because anything happening over the office doesn't have anything to do with making the product. It don't have nothing to do with the product. So if you want to remember it easy, you can simply think of, does this cost relate to the factory where the product is being made? Does this cost relate to the plant where the product is being made? Is this related to the product being made? Is it related to the process of the product being made? If your answer is yes, then it's a product cost, it's a production cost, and you would put it in your manufacturing account when preparing it. If the answer is no, if it's like related to maybe selling and admin or like the office and stuff like that, when I have nothing to do with the factory, the plant where the product is being made, and it has nothing to do with making the product, then you know that okay, fine, that's not going in your manufacturing account. All right. So yeah, and they asked us for three, right? Remember that our wages can be direct or indirect. And it even did say it here, the factory wages we have 60% direct and the rest are indirect. So direct labor, which factory wages. All right. I know sometimes this distinction of direct and indirect, or sometimes you guys want to take everything that you see here and just throw it in the manufacturing account. Remember to ask yourself, does it have anything to do with the factory or the plant where the product is being made? Does it have anything to do with the product being made overall? If the answer is no, that you don't need to go in your it doesn't, rather it should not go in your manufacturing account. Think of the word manufacturing, right? All right. How do I move this thing so I can see? I have a height that's blocking it. I think somebody is asking if royalties can be, what mechanism call it? Royalties can be an indirect cost. It is usually a direct expense. I guess we can consider it being indirect if it's a case where the question would probably indicate like a specific note to say something that we can use to infer that it is not directly traceable to the product. But typically, it is introduced as a direct cost. And you would include it in prime cost calculation because remember that your prime cost consists of your direct costs, which we're going to get into actually because we're going to do statement. No, yeah, we're ready to do the statement. You're welcome. So we're at the statements. And usually, as you guys can see here, and a lot of you, I think majority of you would be doing POA for the first time. So that's why it's important that you practice past paper questions as well, because you get to familiarize yourself with the structure. And every exam paper is different. Every subject is different. So for POA, you usually get the space to put in the answer also. So here they say to use the form on page 15. We go to page 15, we will see the form right here that you should use. And they were kind enough to give you your heading. And if you don't get the heading already on the form, please do not forget to head up all of your statements. Okay? All right. Keep good. So let's go. Chevron manufacturing account. Let me head up since I don't have my heading here. Manufacturing company. As I said, if you guys see any type of yellow, ignore it on the English class today. For the year ended 30th of April 2023. All right. $sign, $sign, $sign. Cool. And please do not practice with Excel. You guys won't have Excel in the exam. I don't know how much of you really would use Excel either way, but just to let you know, please no practice not with Excel. Right, right, right. All right, let's go back to the question. So this is where also persons are having the challenge now, remembering the format or the statement, right? And a lot of you, yeah, to remember it is a problem. Well, guys, it's a sound cliche, but I'm gonna say it again. You have to just practice it. And I'm going to break it down as we go along for you to be able to understand it, because the more you understand it, the better it will be in remembering it. This is how much marks? This is 12 marks. You can't dash your 12 marks, guys. Come. So we're starting with the cost of raw materials consumed. Now, let me break down uh, the first section. The first portion of the manufacturing account is doing this. It is adding your production cost. And as I said earlier, your production cost consists of, write it here, so production cost consists of your direct materials, direct cost and indirect cost, right? Right, consists of direct materials, direct labor, any other direct expenses that you may have, as well as your indirect costs. These are what your production cost is made up of. And the first part of the manufacturing account, this is how this is what we're actually reporting or recording. It's just that there are a little bit more layers. It's not that simple where you just write direct materials and you put one figure, direct labor, one figure, other. No, it's just not that simple. There's a little layer to it, especially with the cost of raw materials consumed. For us to calculate our direct materials, think of when you're the income statement, guys. Your income statement. I'm going to show you how you can match this to the income statement in a little similar way of how it is done similarly. Maybe that can help you to remember it. No, it's not a separate booklet. It is just one booklet, and they give you the space to put the answers. So you see, this is the one. This is the one paper that we're looking at, and they give you the question up here, and then as you go along, and they give you the questions, they give you the space to put the answers. And here On page 15, he gave us the space to put the manufacturing account. Why is this thing not allowing me to see the full question? Hold on, guys. I see your question. I'm just trying to view the full thing because this little heart thing in the corner is blocking some of the question. I was in a practice question and the tip provided was a two color. Will I lose mark? No, no, no. If you draw next column in the exam, no, you won't lose mark. Mm-mm. No, that is minor. Just make sure you have all the relevant and necessary line items that you need to have. And when I say line items, this is what I'm talking about. I'm going to show you now. Just have the content, right? Yeah, you won't lose marks or something like that. Usually they give it two columns, so it's probably because you don't need a third one. But if for your own, use, you feel more comfortable, and you feel like you will deliver better with the third column and you put it, you won't lose marks for that. So this is a heading, cost of raw materials consumed. We're going to be working it out. So everything that I'm going to show you after now is going to be us working on cost of raw materials consumed. And when we're finished, you guys can probably tell me what it is similar to. So we start off with our opening raw material inventory. Let me go back to the question. Here we go. So you guys can see. Opening raw material inventory. And remember, we established from before the question even started that our figures at May 1st, 2022 would be our opening figures, and our figures at April 30, 2023 would be our closing figures. Opening raw material inventory. Here we go. Oh, before I go any further, let me explain raw material, working process, and finished goods. Now, for a manufacturing entity, you will typically have three different classes of inventory, namely raw material inventory, work in process, and finished goods inventory. Your raw material inventory, as the name suggests, it's raw material. This is what you'll be converting into the product, right? But so let's say, for example, we're baking cake. We have a bakery, right? The flour, the egg, the sugar, those are raw materials. Those will be converted later into the finished product for sale. You don't usually sell the raw materials either. Work in process inventory, it started. The process has started. It's literally work in process. Yes, you started the process, but it's not completed. Because sometimes at the end of your financial year or at the end of the month or whenever you do your assessment, you will have some work that has started but not yet completed. Anything that you start but hasn't been completed is work in process. So, for example, the cake, we have the batter. Let's say at the year end we made some batter, but we haven't placed them in the oven yet to bake the cakes. The batter is work in process. It is not a complete good, and it's not raw materials either because we're now in the process of converting the raw materials. We just haven't completed the conversion process for us to get a finished good. That's work in process. And we're gonna throw them away. So let's say the year end comes and we have some items that we started working on but they're not finished. We're not gonna throw them in the bin. No, let's bring them over to the following financial year. That's it. And finished goods inventory is what we usually sell now. That's when you're complete. This is the complete, nice, clean looking, tasty cake that everybody wants to buy. It's now complete. You've completed the conversion process and you have something ready for sale. You have the final product now. So raw material inventory at the 1st of May 2022 is going to be $23,000. I'm going to put that in the middle column right here. Let it sit there for a while. We'll soon get back to you. Sit down there, so come back. We're now going to be putting our purchases of raw materials. So we started with $23,000 in raw materials, but we bought some more throughout the period, right? So purchases of raw materials, we bought how much? Here it is in the question. Let me highlight that better so you guys will be able to see. 306,000. We bought that during the year. When you look at it, this is what we would have paid our supplier. But we also had carriage inwards. The carriage inwards relate to the raw materials. It's what we would have been paying to have it come to us wherever we need it to, right? Kind of like delivery. Yeah. We need to adjust our purchases with carrying inward. So look at this. We have purchases of raw materials. Let's put it in the first column since we realize that we have carriage. So we're going to have a little adjustment to make. Ooh, an extra zero. Hold on, too much money. All right. We're going to be adding carriage inwards. Guys, what is this looking like? You look familiar yet? This is giving as like a deja vu moment with our next topic or our next statement that we're used to. Our carriage inwards is $2,000. Let's add those. No, let's search for, do we have any return outwards? We're going to let's return outwards. Did we return any of our raw materials? Was anything wrong with them for us to return them? Because if something was wrong and we returned them, we need to subtract them. Right? Logically, it makes sense. You gave it back, you need to subtract it. But this question doesn't have any. But oftentimes students overlook this part. So I'm just going to put it for the purpose of learning. Yeah? And just put a zero there. So you guys won't forget. If your question have it, you need to include it in your question. Don't overlook it, please. And it would be subtracted if we had it. All right, cool. Remember, I'll be sharing the solutions after in the study hub. Now, this figure, this $308,000, is going to be our net purchases on raw materials. Some little differences in terms how some persons, some textbooks and some persons may have a little difference with how they call it, or no major difference is fine, guys. Yeah. But line items are necessary. Look at this. Remember the question said to us. Showing clearly cost of raw materials consumed. That is what we're working on right now. They want to see it. They want to see prime cost. They want to see total factory manufacturing overheads, etc. They want to see those things. So you're going to make sure you show them. I'm going to highlight them when I get there. So net purchases on raw materials. We're currently calculating the cost of raw materials consumed. We'll soon reach the end. Now we put the net purchases in the middle. So now it lines up with the opening raw material inventory that we set aside to wait for us. We'll be there in a bit. Yeah, we're now there. So you started with $23,000 in raw materials. And after adjusting for purchases, what you would have purchased throughout the year, you came to a net purchase of $308,000. So what we're going to be doing is to be add your opening raw materials inventory to your net purchases on raw materials to get your raw materials available for use. This is what is available for use in production, right? Throughout the year, this is what would have been available. And it makes sense logically, guys, because think about it. If you start the year with 23, you buy 308 more. What do you have available to use throughout the year? You start the year 23. Throughout that year, you bought extra 308. It makes sense to say you have a total of 331 available for use throughout that financial year. Yeah? So this is raw material available for use. All right. And now we're going to be subtracting our closing raw materials inventory. So we had 331 available for use. Our closing raw materials inventory would be what we did not get to use. Think about it. If you end the period with something, it simply means you didn't get to use it throughout the period in your production process. Yeah? So less closing raw materials inventory, and you're looking for the raw materials inventory at the year end. This is why you need to pay attention to the year end date, which is April 30, 2023. That is our year end. So raw materials inventory at the year end would be $33,000. This $298,000 would therefore represent what we call our cost of raw materials consumed. That's what we were working out. All right. And it's the same thing as your direct materials. Yes, this is the direct materials that you would have used in production. The cost of your raw materials consumed in the production process. Will I lose marks if I forget to put on raw materials? I don't think so. Well, no, I don't really think that is something you'd lose marks for, to be honest. And if you should lose marks for that, it wouldn't be a lot of marks. But that is very minor, actually. Well, at least to me it is. I've never marked CXE though, so I don't even know what they look for, but that's something is very minor for you to lose marks or something like that. That'd be kind of crazy. Why are we using three columns? Our end column is where we put our final totals. Yeah? Middle column is where we do the sub adjustments and sub calculations. Well, adjustments and calculations. And our innermost column here is where we do sub adjustments. So end column, final totals, middle column, adjustments, or when you have a couple figures that you're going to be adding up, you list all of them there, then you put the total at the end. And the innermost column, which you barely use, is a little sub adjustments column where you need to do some little extra workout, maybe. Yeah, such as calculating the net purchases. Now, the question wanted us to show this clearly. So let me highlight it in the next color. Now, guys, this is something that you guys would have seen before, where you have opening whatever plus, and you have a purchases plus carriage in minus return outwards. Then you get a net purchases, adding net purchases to opening raw material, opening whatever, and then you would have subtracted your closing to get the cost. And it's very similar, if you guys haven't picked up as yet, it's very similar to a section in your trading account where you're trying to work out cost of goods sold. This is literally how you work out cost of goods sold. Opening inventory. Yeah, the purchases, you add carriage in, you let return out just the same. You get your net purchases, you add your net purchases to your opening inventory, then you subtract your closing inventory, and you get cost of goods sold. When you can make connections like that with what you're learning, then it will make it easier for you. I always say do not learn in segregation. Find how things connect and how you can use things to remember, use something from something to remember something else. You cannot learn accounting segregation. Everything is connected one way or the other. And you have to learn the principles and the concepts. Do not try to swap the content. Cool? All right. And logically, it does make sense because you have 331 available for use throughout the year. The closing raw materials inventory is what you didn't get to use. The year finished, you did not get to use this. So if you had 331 available for use, you didn't get to use 33, then realistically it must make sense to say that you actually used 298. So this is the raw materials consumed, and this is what the question asks us to show. The cost of raw materials consumed. There we go. All right. They're looking for that. So if you don't show it, you're not get the marks to it. Please, line items, when I talk about line items, this is what I mean. These are line items. You have a description, you have a figure. You have a description, you have a figure. These are individual line items. Description, figure, description, figure. That's what I mean by line items. Focus on line items. All right. So now that we would have calculated our cost of raw materials consumed, which is our direct materials, let's put in the rest of our direct costs that we have, such as direct labor, because we're going to need to work out prime cost. Anybody can drop in the chat what the prime cost formula is? Prime cost. Anybody? Nobody? One person is not sure. Nobody? Prime cost? You need to know your prime cost because let me see. The question wants us to show prime cost. Not true. See, yeah, guys, we need to know prime cost. The question wants us to show our prime cost. All right, let me put your formula here for prime cost. Your prime cost is literally you just adding all of your direct costs. Yeah. So your direct cost would popularly include direct labor, direct materials. Those are the popular direct costs. But of course, as I mentioned earlier, sometimes you have other direct costs. So you add up all your direct costs to get your prime cost. Direct materials plus your direct labor plus your other direct costs. That is your prime cost. All right, cool. So our direct labor, let's go back to the question to find what we should put. So our factory wages, right? The wages that we have to pay the people that work in the factory to make the product, those are directly attributed to making the product because if they don't come to work, no product is made. However, some of them may be indirectly attributed to making the product, such as the supervisor. The supervisor salary is indirect labor. The supervisor isn't making anything, right? Supervisor just walking around and watch you do the work, not doing anything. So you will have indirect and direct factory wages. So pay attention to the question. The question here says that 60% of our factory wages are direct and the rest are indirect. So do not take up this full $123,000 and put down as your direct cost for factory wages. Read carefully. Only 60% of the 123 is direct. So that means we're going to be allocated only 60% right here. So let me put my workings, and I'm going to always say this until you're tired of hearing me say it. Show your workings. Show your workings for every single thing, please. The examiner cannot read your mind and guess what you wanted to write and guess how you got it. So show your workings. Yeah, in a time efficient manner, of course, because time is against us in the exam. So 60% of 123,000. Wrong sign, wrong sign. One extra zero. All right, 73,800. Now we can put that the final column over here because we're going to be adding up all our direct costs. And as we mentioned earlier, the royalties would have been other direct costs as well. All right. Let me just put other direct costs so you guys can know that's why it's here. So let's say you have to pay royalties for every item that's produced. It's directly attributed, right? It's a cost that is directly attributed to you producing the product. So in this case, or $17,000 is a direct cost or royalties here. other direct costs. So we have our direct materials, our direct labor, and our other direct costs. And when we add all of these, we get what we call our prime cost. Yeah. And the question again asks us to show clearly our prime cost. So let me highlight that in purple as well. So that's 388,800. Cool. So we've calculated our direct cost. We've gotten our prime cost. Now what's left is our indirect cost. Yeah, man, because remember I'm telling up here, so you know. Production cost consists of direct cost as well as indirect cost. So your production cost will consist of direct materials, direct labor, other direct cost, indirect cost. That's what your manufacturing, your total manufacturing cost will consist of all of these four elements. Sometimes you will not see other direct costs. It is less common, but it's fine. May I tell you still, so remember, and this question had it. I'm glad that this question had it. Because a lot of persons would have overlooked it. All right. So factory overhead. Your factory overhead, same thing as your indirect cost. Yeah? Don't let the fancy words fool you. These are our indirect costs. And let's list them. We have indirect labor to start. And we usually have indirect labor, by the way. If we're looking at our question, we will see the same factory wages here, which they said that 60% are direct and the rest would be indirect. And the rest would be 40%, right? So the calculation here is 40% of $123,000. All right. So since we're gonna have a couple indirect costs to add, we're just gonna put them individual in the middle, then add up the total to put in the end column. So 40% of $123,000, and we'll get $49,200. Yeah. For indirect costs, remember our question asked us, and we would have stated some up here. You remember? Yeah. So yeah, we already identified some, but let's search a question to see if we can find more. We would have had rents, rates, and insurance. Please read carefully. Sometimes this additional information would be in the table, like it's here now in the question. Other times, you will find this additional information about how it should be prorated and apportioned in notes below the table. Additional information or additional notes. Please read carefully. Please pay attention to everything. For the rates and insurance, don't just go ahead and put down the $45,000 like you're in a hurry. Read. The rates and insurance are to be apportioned 4-1 between the factory and the office. So 4-1 between factory and office. So factory gets 4. 4 comes first. Factory comes first. The factory gets 4. And office gets 1. 1 comes second. Office comes second. That's how you read it. That's how you reason it out. So for those of us who don't remember about ratios, now is the chance, guys. So we're only concerned with, since we're doing the manufacturing accounts, we're only concerned with costs associated or costs relating to the factory. Yeah? We're talking about office right now. So we want 4 out of the total. So if you have 4-1 ratio, it will be 4 out of 5 because the total will be 5. 4% is 5. So the factory will be getting 4 out of the total of 5. So that's how you get a fraction when you're working with your ratios. So 4 out of 5 will go towards the factory, multiply that ratio, that proportion, that fraction by the $45,000. That's equal to 4 to 5 times 45,000. And we'll get $36,000 for rates and insurance. We also identified our general expense. Read just the same. And they say here that $3,500 is a portion to the office and the remainder to the factory. We don't care about how much is going to the office. Remember? So we need to find the remainder that should go to the factory, right? Some persons may be asking internally, but you guys will not ask me yet. How or when do we use the other things that we're ignoring now, like the office portion? Those will go in your income statement. Okay? So if you're asked to prepare an income statement for a manufacturing question like this, then the things that we're ignoring now, like the amount that is associated with the office, those would go to income statements. Those are what we call period cost, or you can just simply say non-production cost. So your production costs typically go in your manufacturing accounts, and your non-production costs would go to the income statement as an expense. So general expense would be $14,000 minus the 3,500 that we're not concerned with right now, because they said the remainder is for the factory. So you find the difference to get what the remainder is supposed to be. Are we following? We look a bit quiet. We're in, we're following. Yeah. Haven't lost anybody. The question also said to show clearly the total manufacturing overheads. All right, one person is following. Total manufacturing overheads. And this is where we get it now. Remember I showed you guys? Let me go back in. Well, before me showing that, let me just add up our overheads. Let's double check if we have any more though. All right, this is our inventory, revenue, da da da. All right, return inwards relates to sales. That I know food manufacturing. Yeah, man, administrative expenses go to your income statement. So office stuff are admin expenses, that's correct. But those you don't put them in manufacturing account because it doesn't have anything to do with manufacturing the product. Those would go to the like income statement. All right, we don't have any more indirect costs working. So when you're finished with your indirect costs, you total them. Total factory overheads. You can use indirect costs, it's the same thing. How we got 45,000. Oh, let me go back. Oh, I don't know why this heart thing you don't move from my screen, so I can't see some of the questions over there. Oh, okay, good, good. Something changed. How do you get the 45,000? Oh, this 45,000 here for raise and insurance. Let me go back up. Here. So in the question they gave us the 45,000, but it said to us that the raise should be a portion. The raise and insurance figure should be a portion between the factory and the office. So the factory will get 4 and the office gets 1. So that's why we are portioning 4 to 5 of the total of the $45,000 to get the amount that should go to the factory, which should go in your manufacturing account. Got it? All right, so we're totaling our factory overheads. And since we have a final total figure, you're welcome. You just put that in your end column final total here. So that's your total factory overheads. Now to what the question says to show clearly your total. Oh, we just did it. Total factory manufacturing overheads. Right, here you go. Yeah, total manufacturing overheads. So let me highlight that. Didn't realize that was one they were asking for. Nice. All right. The question is kind of guiding you because you realize it's coming in the order. It was kind of guiding you in preparing the statement. After you get your factory overheads, now you're going to be adding your factory overheads would have been your indirect cost, right? So after you get your factory overheads, you're going to be adding them to the prime cost. And that's how you get your total manufacturing overheads. So total, not manufacturing overhead, sorry, total manufacturing cost. So let me go again. You're going to take your total factory overheads, that's your total indirect cost, and we're going to be adding that to the prime cost, which would have been our total direct cost. And that's where you get your total manufacturing cost overall, the total production cost now. It makes sense because remember, I told you manufacturing cost, your production cost, is made up of both direct cost and indirect cost. So when you add up all of them, direct along with indirect, you're supposed to get your total manufacturing cost, same thing as your total production cost. Right, the question never asked to show clearly that one, but still we're showing it because they need it to go further. Now, after you get your total manufacturing cost, this was this simply put, this that I write right here, these four things I would say add direct materials, direct labor. If you have any other direct costs, you add up those to get your prime cost, and then add indirect expense, indirect cost to get your production and your manufacturing cost. That's what we just did. But it just took so long because you have layers and you had to work out your direct materials because it wasn't given to you in the question. If the direct materials is given in the question, you don't need to work it out. So you have to pay attention to the question that you get. That's why swatting is not going to help. You need to understand. Okay? So we have the total manufacturing cost now, and we're going to be adding our opening work in process inventory. So go back to the question. Opening work in process inventory. So remember, the opening figures are the ones at May 1st, 2022. Work in process inventory. This is what you do with it now. You're going to be adding it right here, and that's $14,000 opening work in process. And let's put it at the end. So let's add that. And then now you're going to be subtracting your closing work in process or your ending work in process. Closing work in process inventory. And that is, here it is, at April 30, at the year end, work in process inventory is $29,000. And when you do that, you get this. The question is saying to show the production cost of goods completed for the year ended. That's where we are, and that's the end of the statement. So production cost of goods completed. Let me explain that. Remember that this was your total manufacturing cost or total production cost, right? Out of the fresh stuffs. But remember, we started with some that were not finished last year. Obviously, they never finished last year. They are in process. We are going to be finishing them. So you add the cost of these because you're assuming that, hey, they will be finished, which they should be. Probably even finish them before you start a new batch, right? That makes sense. And you subtract what you didn't get to finish at the end of this financial year that you're reporting for. And this is how you get your total production cost of goods completed. Keyword completed. These goods will have been completed. And that is it. We draw a double underline. Oh, let me highlight this. The question wanted us to show this clearly as well. So this is your 11 marks, 12 marks actually. All right. BII says to calculate our net sales figure. This is income statement business. Easy, easy. How do we get net sales? This is so easy, right, guys? Let's write the formula. Net sales is equal to sales. Look at this easy one, Mark. Even you don't even have to know anything about manufacturing account to work this. Return inwards. Yep. So net sales is equal to your sales minus your return inwards. So your net sales is there for show your workings. I beg you. Write a formula, show your working, right? So let's find the sales figure in the question. Sales revenue would have been 658,500. Let me show you where I got it right here. This is your sales revenue. 658,500. We're going to be subtracting return inwards, which the question shows us right here of $1,600. So your net sales is therefore equal to 658,500 minus 1,600. All right. 656,900. One mark is one mark. Like, I was just get one mark a while ago. That was like giveaway mark. Like, them to be a sorry for my sorry, but just give them one mark. Literally. Alright, last two marks of the question. Chevron, the owner, paid $2,300 for insurance. This amount covered the $1,200 insurance premium on Chevron Manufacturing Company and the $1,100 insurance premium on Chevron's family house. The accountant credited the bank account with $2,300, debited the insurance expense account with $1,200, and debited the drawings account with $1,100. Identify the accounting policy, the accounting principle applied by the accountant in this transaction. The accountant did the correct thing, right? So overall, Chevron, which is the owner of the business, paid $2,300 for insurance. Only $1,200 related to the company. So the accountant correctly only recorded that $1,200 as expense, insurance expense. The remainder of $1,100 was for Chevron's family house. That's Chevron's personal expense and not to do with business. In which case, it shouldn't be in the business books. So the accountant correctly recorded that. It shouldn't be in the business books as a business expense, rather, right? It shouldn't be there as an expense. So the accountant would have went ahead and correctly recorded that as a drawings. Since that's Chevron's personal problems. So here we can see that they're adhering to the business entity principle or the separate entity principle, wherein the business related finances should be treated separately from the owners. So when the owner take the business money and do his personal things, the accountant did not record it as a business expense because it wouldn't have been. Right? You have to know. Oh, these are some things that you guys look over or overlook, rather. But you need to know this. All right, we're good, guys. We're going to move on to our next question. Oh, let me just I'm just be lazy. I copy and paste what I just said. Yes, it is separate entity. Yeah, correct. Or sometimes you may see business entity, but it's the same thing. Don't let them get to you with that. So you can see separate entity or you can see business entity. And then the next one, the accountant did not make any entries in the accounting records for orders received for goods to be supplied in the next financial year on May 13th, 2023. What principle is here? What they're basically saying is they got some orders, or let me see, they got some orders. The accountant did not make any entries in the accounting records for orders received for goods to be supplied. All right. So they got some orders from customers early, right? And they they will not be pushing out those orders until next year. So they didn't recognize any of that. So even if they get paid, it would be deferred revenue, not revenue for this year. So the accountant correctly did not make any entries for those. What principle is this one? These are easy one marks, and guys. So if you know your accounting principles and concepts, so you have, we know the business entity, we have the prudence, we have the accruals matching concept, consistency. We need to know all of those. Prudence. All right. So our prudence concept basically says we're not supposed to be overstating, right? Not supposed to be overstating our profits or our assets. We're not supposed to recognize losses early, things like that. No, for this, it is, as I mentioned, the term or the deferred revenue to an extent. We are looking at the accruals concept here. And the accruals or the revenue recognition concept. Correct. Somebody said accruals, correct. Or revenue recognition, right? When do you recognize your revenue? Yeah. If you don't supply anything, the customer not getting a good amount of service. So you're not supposed to recognize revenue. You recognize revenue when it is earned, meaning you would have supplied the goods to the customer or you'd have performed the service for the customer. So even if the customer pay you, you're not supposed to recognize revenue until it's earned. So if revenue wasn't earned in this year, then it shouldn't be recognized in this year. And that is the accruals concept. And we prepare our financials on the basis of accruals concept as well. Right? I guess you guys are more familiar with accruals concept from an expense perspective, but it also applies to revenue. All right. That's it for our Chevron question. I would have gotten 20 marks. Yay! Go we. Any questions before we move into another question? Alright, giving you guys 2 minutes to go stretch your legs and drink some water and come back, refresh the brain, wake up, and come back. 2 minutes. 2 literal minutes. Don't go too far. Two minutes. Alright, 2 minutes up. Let's go into the next question. Next question. Alright, this is a company accounts question. So we're going to look at paying account, company question. So Payne Limited has been asked to submit a business plan for the launching of a new products line. List three components Payne Limited should include in its business plan. So you realize it's company accounts, but it has a mixture of accounting for the entrepreneur as well. What do we put in our business plan, guys? Business plan question should be a simple question. You want me to actually do a business plan? It's theoretical. So they ask you the components or the elements of the plan and information about that. But you'll be required to do a plan. No, that's mm-mm. All right. So, cool. Let me zoom this up first. This is question 4, 2022. POA past papers. I don't know if this syllabus shows you this in detail. Let me see. Let me double check. Alright, but anyways, so something that we typically remember easily is the executive summary, right? The executive summary. Let me find accounting for the entrepreneur. Back then again, a question like this, I didn't really get, to be very honest. I mean, in my year when I used to get them question here, but it was a part of the syllabus, so it's still within the scope of what you're supposed to be knowing. Oh, wrong syllabus, me the fan. More showing us something. Still gonna answer, but more showing us something first. Alright. Accounting for the entrepreneur. When I said to study with your syllabus, this is what I mean. Oh, your syllabus also have a specimen paper in it with answers. So, and I think the answer, when they show you the answer, they kind of show you how the examiner would mark it, like how they would allocate the mark. So, yeah, if you weren't thinking of doing that, I would advise you to do that and check your answer and mark yourself to see what the examiner will be marking. Which one is this? Is it section 11? Yeah, section 11. All right, this is our section 11. Accounting for the entrepreneurs. So this is where the payroll stuff comes in. Payroll topics is becoming more common on the paper as well, and it is something that is more simple. Should be a bit more simple for you guys, but a lot of times because it's overlooked, persons are not prepared to answer a payroll question and their cash flow projection. I don't find what I was looking for. Cash flow, that's not what I was looking for. And the budgets are not bad either, guys. The budgets are not bad. Okay? It's sales and production. A budget is a forecast. So you can find a budget template and you can work with that. I still, me not go on Google find one unnecessary budget template. No. Find one of your textbook. Find one from whatever your teacher would have given you, but not from Google, because you can have different types. So you want to get a simplified version and nothing that will confuse you. Same with the cash flow as well. Your cash flow projections. I know sometimes not everybody gets to cover cash flow, but it's becoming more important now and more shown on the exams, so we need to focus on that too. That's what I was looking for. All right, this is your objective. So how I say to study with your syllabus, know what is asked of you. So we just need to use accounting knowledge and skills to prepare a simple business plan. It didn't give you the content here in terms of how they may ask you questions for a business plan or what they're looking for. So this question about a business plan, when you're learning the business plan, when you look in your textbooks or from your classes or whatever, when you're learning your business plan, the first thing you'll learn is the components of your business plan. So you have 6 main components of the business plan. Those are executive summary, as I said, firstly. It's usually the last thing you write, but I first thing for the plan. Summarizes what the plan is about. You would have like the company description, your market analysis, your marketing strategy, your financial plan, and your operations plan. These are the main areas. Your feasibility study, yeah, that will come under your market analysis, yeah. So, question asks for 3, I'm giving you 6. Okay, spells execute. Again, I'm an English class with it. Your company description, market analysis, marketing strategy. You guys would do like a business plan, like I don't know, that's more like maybe university stuff or something. I don't know if you do it in POB too, but business plan, when I did a business plan, I know at university it was such a big Big project actually. It was a lot. But yeah, these are the components or the main components of your business plan. You may find different terminologies, same meaning, but maybe like a little different terminology with different sources. So let's say, for example, someone says financial analysis rather than financial plan. It's the same thing though. So that's what I mean by different. All right. And if you use your syllabus hand in hand with your textbook and your past papers, you can at least see what CXE is saying you should be covering. And if they say the content would be preparation of a simple business plan, then you know that, well, if you're going to prepare a business plan, you know the components of the business plan in the first place, right? Which paper was it? Not that one. All right. So authorized share capital of paying limited is as follows. So paying limited is authorized. Your authorized share capital is the maximum amount of shares that you can issue. Okay? And it can change. It can actually change. So currently it is 200,000 ordinary shares for $1 each, 500,000 8% preference shares of 50 cents each. Yes, so the classes of shares, the two main classes of shares that we are familiar with would be the ordinary shares and the preference shares. They gave us some information, and then the first requirement is saying to use the form provided on page 19 to prepare the journal entries to record the three transactions above. Narrations are not required. Your narrations is the sales statements at the end of your journals to basically kind of explain the journal, yeah, or whatever the entry is. That's a simple sentence. But narrations are not required. Here's a form that they give you to record your entries. Again, they will give you this space to record your answers. So you won't get two booklets, just one. Let's look at the first one. And then again, with this, you would need to do any heading up. This is question. What question is this? B. All right. This one is B. Cool. All right. So first one, June 1st, 2021. Payne Limited issued 100,000 ordinary shares at $1.80 each. These shares were fully subscribed and paid up. Just means that the people didn't pay for the shares, right? So you would have gotten some money through cash or bank. Cool. Yeah. Typically bank, but yeah. How do you record this? When you're issuing shares, you're getting money. When you're getting money, you're increasing the amount of money in your bank account or your cash account. Okay? And you're also getting capital. That's the whole point of issuing shares. Increase the capital. So the standard entries when you're issuing shares, you're expected to be increasing your cash or bank account when it is fully subscribed and paid up, and crediting your ordinary share capital account. So you put your date, it is the 1st of June 2021, and our bank account is going to be debited, and we're going to credit our capital account. However, let's pay attention to something here. You need to pay attention to the par value of your shares. Your par value is like the authorized, no, your par value is like the face value of your shares, right? So it is that stated value. Just as though you have the stated amount that is authorized to be issued, you have a stated value, which is the par value to say, okay, yeah, this is what the face of the share is value, the nominal value. However, you can sell your shares above the par value or below your par value. If you sell your shares above the par value, that means you get a premium, right? You sell it for more than you quote unquote dub it to be valued, right? So you get a premium. If you look at this, when Payne issued the 100,000 ordinary shares, they issued it for $1.80 each, but the par value is only $1. So that extra 80 cents is premium, right? And we need to therefore record it. So when you issue your shares in excess or above the par value, and the par value would be stated like this here. So sometimes they would say 200 ordinary shares with a par value of $1. Or if they say this is authorized information, when they list authorized share capital info and they give a price beside what is authorized, that price is usually the par value price. Yeah. So what goes in your bank is everything that you're getting. So what you're going to get in is this. You need to pay attention. Again, the 100,000 ordinary shares, that is in quantity. That's not value. That's not money. That is quantity. You are not getting $100,000. No, you're issuing 100,000 shares. That's a quantity of shares. So in order for you to get your dollar value, you need to multiply the number of shares that you issue, which is 100,000 shares. Multiply that by how much you sell it for, which is $1.80. That's the amount of money you would collect. And if we're getting money, we're increasing our bank account, right? That's 100,000 times $1.80. So we would have gotten $180,000. So it debits our bank account with $180,000. For credit, let's do an indentation before we do a credit entry. So our credit entry, we will be crediting it is ordinary shares that we're issuing. So we're going to credit the ordinary share capital account, ordinary share capital with the amount at par. It is the amount at the par value that we record in the ordinary share capital account. So the par value is $1. Yes, we know we sell it for $1.80, but that's not the figure, that's not the value that you'll be using to calculate the amount that should go into ordinary share capital. It is the value, the par value. So $1. So still you did issue 100,000 shares at $1 par value. That is the par value. Why do you keep an eye $2? That is the par value. So what goes in the share capital? It is the value of the shares at par value, which of course 100,000 times $1 will be $100,000. Cool. And you realize this doesn't balance. This isn't balanced. Debits and credits must always equal, right? Here. So we're gonna have two credit entries. Different quantities coming from somewhere. And as I explained earlier, any excess above par will go in our share premium account. Yeah? Or you can see some persons call it additional paid in capital. Same thing. So your share premium is on the excess now. So what was the excess? If you sell the shares for $1.80 and the stated value, the par value would have been $1. Okay, why is that maybe? So to get the premium, here's how we get the premium. It is your share price minus the par value. That's how you get your premium per share, right? In our case, it was $1.80, which is the price that we sold it for, minus the $1 par value, and therefore we get 80 cents as the excess, as the premium. So that's where this 80 cents is gonna come in our calculation. So you issued 100,000 shares, that's the same, that doesn't change. Times that by the premium now, the excess, which is 80 cents. And when you see 100,000 times 80 cents, you get $80. And now you would see that your total credit is 100,000 plus 80,000, which gives you $180,000. And your credit now equals your debit of $180,000. And this is what we call a compound entry, where you have a debit here and two credits. But it's fine. There's nothing wrong with that. Because at the end of the day, your total debit equals your total credit. What we had before couldn't have stayed when you just had the 180 and the 100 because your debit and credit wouldn't have balanced. Debit and credit must equal out when you're doing journal entries. Okay? You can debit $50 and credit $60 and just run the entry there. So where's the difference? If the shares were issued at $1, you wouldn't have a share premium. The share premium is excess. Yeah? Excess. When you issue the shares above the par value. They said narrations aren't required, so we don't need to put it in. Usually the narrations go right below the entry. I guess well, November. Oh, never mind. All right. The next one is the 1st of November 2021. What did I do? It's 2021. Where Payne Limited issued 200,000 8% preference shares at $1 each, and these were fully subscribed and paid up as well. So yes, we got our money. Guys, some things, even if you don't know everything, you can pick up marks some places. Yeah, they get money. Even tell us that it's fully subscribed and paid up, and yeah, they get money. You know, if you debit a bank account, right? Yeah, you get money. Yeah, so you need to find ways to pick up marks even if you don't know everything. So these are preference shares. So again, our preference shares were issued at where is it? Fifth. They were issued at $1 each. However, the par value is 50 cents per preference shares. Same concepts apply, same principles apply. So our bank, how many shares did we issue? 200,000 preference shares. How much did we sell them for? $1. We sell them for $1 because remember we're collecting that we are collecting, so you have to record the full $1 that we sold them for to show the amount of money we actually got. So that is going to be equal to 200,000 times the $1, which you get $200,000. Yeah. Then you're gonna credit your share capital account again. You indent before we do the credit entries. So we're crediting the 8% preference share. That's the name of the shares, 8% preference shares. The 8% preference share capital account is going to be getting the credit entry. And to calculate that, it is going to be as follows. The same concept applies. The number of shares that we sold, which is 200,000 shares, multiplied by the par value. Remember, the share capital account, you need to use the par value to record in the share capital account. And the par value for the preference shares, as we can see here in the question, is 50 cents. So here, crediting the share capital account again, 200,000 times 50 cents, and we get $100,000. And again, the excess is going to be going to the share premium account. So share premium calculated as follows: the same 200,000 quantity of shares times the excess. What is our excess in this case? It is the $1 par value minus the 50 cents, right? So let me calculate the premium here. So this premium price is the $1. Sorry. Yeah, the $1 is sold it for minus the 50 cents par value. It gives us a premium of what? 50 cents. Yeah. All right. What's that by 50 cents? And that's equal to 200,000 times 50 cents. So half and half. And again, the total debit of 200,000 equal the total credit of 100 plus 100, which is $200,000. Same concept applied, guys. Make notes if you have to. This is a live. The video will be up on our YouTube immediately after the live end. So if you need to come back, if you want to just zone in and focus on it now, fine. If you want to come back now, if you need to come back and make notes and pause the video to make your notes, that's what I do, Yeah, because yeah, I am still a student. I'm an accounting professional student, and I'm doing my professional exams. And when I come on YouTube and I find some videos and I'm watching my video, I listen. So I watch the video and I listen. I don't write anything. I listen up to a certain point, or based on how they do it in parts. I listen up to that part and I just zone in and I focus and I follow everything that the tutor is doing. And then after I say, all right, that's enough section for me. I just listen 20 minutes or 15 minutes. I'll pause the video. And then I go back from the beginning and I start to write notes. I start to make notes. And then I continue. I do that sometimes and it works. So yeah, whatever works for you guys. And then the last transaction is April 1st, 2022, where Pay Limited issued $80,000, 6% debentures. Debenture is a fancy name for a loan. It's a type of loan, in case you guys are wondering what that is. So you're going to treat it as a liability. Exactly. Yes, because it's a loan. So the 1st of April, 2022, if the entity is issuing debentures, they're getting the loan, they're getting the money, right? So again, your bank account is going to be debited with the amount. You don't need to find 6% of the 80,000. No, 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 no. The 6% is basically the interest rate, just like you would still have a 5% loan. That's what the 6% represents for the interest. So don't go into people and examine your recording the loan or the debenture value and you're gonna multiply 6% by 8,000. No. The amount of money that you would have gotten from this debenture, from this loan, is 80,000, and that's what you need to put in your bank account. Debit 80,000. That's the amount of money you got. And you're gonna credit the liability account, which is the debenture account. So the 8% debenture account. So debenture, same 80,000. And that's how you get how much marks? 6 marks. So it's 2 marks per entry, I think, based on it's just oh, you can do that in the exam as well. You can look at the weighting of your questions. They give you 3 general entries to do, and your question is 6 marks. So more than likely it's 2 marks per entry. And that's it for the journal entries. They're getting 6 marks right there. So we're going 9 marks already out of the 20. Any questions? You guys are quiet. I'm just gonna assume we're up to par if we're quiet. I'm not prepared on me, guys. Yeah, I'm prepared on me. Alright, moving on to C. We're all good. We're going to use the information presented for the issue of shares on page 18 to prepare an extract showing the shareholders' equity section of PIN Limited's statements of financial position as of the 30th of April 2022. And this time they didn't head up for us, so we need to head up. You get marks there heading up. If I even half mark, head up, please. Thank you. So we're going to be doing an extract of the financials of the balance sheet. Statements of financial position is the same thing as balance sheet. It's just a little fancy term. Don't let them trick you. It's the same thing as your balance sheet. They want us to do the extract. You're not doing the entire balance sheet. You're doing the extract showing the shareholders' equity section. Shareholders' equity are the same thing as capital. Yes, equity and capital. They wanted to show the capital section of the balance sheet. So let me head up. PANE, PANS, limited statements of financial position. And since this is an extract, we're going to put extract in the column here in the bracket. As at. Yeah, balance sheet is as at. Please get it right. Income statement is for the year ended. Balance sheet is as at. As at a particular point in time. All right. We're just doing the capital section. So no matter ask for, you don't get no asset, you don't get no this, you don't get no that. Pay attention to what the question is asking you for, please, 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 please. Question never asks you for no asset or for a full balance sheet. It's just wants the capital section. Right? So we're financed by shareholders' equity. That's what the business raised capital, and guys. When it comes to company accounts, capital is raised through is your shares. That's a main way that you raise capital. That's how companies raise capital. Some public, some private. So public companies can raise capital from the general public. So that's why we have something that we call Jamaica Stock Exchange. We have the Trinidad Stock Exchange, Trinidad Stock Exchange. That's where you can invest in public companies. All right. So let's state or authorize share capital first and foremost. I know it's a lot to remember, guys. I know. But we gotta remember them. So authorized share capital, we're writing, let's go. We had 200,000 ordinary natural. Yeah. Here's where we're getting the information from for the authorized share capital, right here. Write it as is. Write this back as is. So 200,000 ordinary shares at or of $1 each. And we have 500,000, 8% preference shares at or of, doesn't matter, 50 cents each. What's the value? What is the monetary value of these shares? Please don't write back 200,000 and that's 500,000. Don't just write it back like that. Don't calculate the value. So if it's 200,000 shares, quantity at $1 each, so $1 for one share, it's 200,000, sorry, times $1, which it does come out to $200,000. You get lucky this time. But look at the preference shares. The preference shares is 500,000 shares. That's the quantity of share, right? So it is 500,000 quantity times the value, which is 50 cents each, and you get $250,000 value of shares. Right? Let's add these. Okay. Cool. Now, write or authorized share capital, you can double underline it because you're not going to be adding it to anything. You just state it and you move on. Now we're going to be noting our issued share capital. And we're stating our issued share capital at par value. Yes. Where are we getting it from? Remember, we did the entries up here. So our issued share capital. So for our ordinary share capital, ordinary shares, we credited the ordinary share capital with $100,000. See there? Remember? That's where we get this from. Let me just go to color coding so you can match back. So this 100,000, that's where we get it from. The question was a simple question, so we just issued them, and those are what is in issue. It didn't tell us that anything was in issue before these issues, by the way. Did it? No, it never tell us anything was in issue before. This is the information we have working with, so that's the information we use. And you have the 8% preference shares. And that one was how much again? See there, we credited the preference share capital account with 100,000 just the same. But let me highlight so we can have a little color code. 100,000, 100,000. So this is our issued share capital, and we record our issued share capital at par value. Remember, no, the excess. Remember, we have some excess, right? Yeah, man, we're gonna record it. So this is where you put your share premium account, and your share premium account is a type of capital account, just the same. So our share premium here, it is going to be a total of this credit of 100,000 and this credit of 80,000. Let me just put the workings in the bracket here. So that's equal to 180,000. But let me do a little color code, just the same for the share premium. So you guys can see that we would have added this 100,000 plus this 80,000. And now we can add these to get our total issued share capital. All right. And that is $380,000 as our total issued share capital. And that's it. They didn't want us to do anything else here. They just wanted the capital section, and this is the capital section. So you would show your authorized share capital, and you'd also show your issued share capital. Some persons probably have a line in between here where they add the issued share capital. Like they would add these, have a subline, and then report the share premium separately. After that, so you get the same figure right here. It's the same thing. Yeah, you have some persons who do that. So they basically subtotal this, then record the share premium. That's fine also. All right, that's how many marks? That's 6 marks. All right, so company accounts is a little sticky, and it is it's not the easiest. I know it's not, but when it comes down to doing the journals, it's the same concept, same double entry concept, same asset capital liability concept, same thing. So your bank account is being debited because you're getting money. Bank is an asset, assets increase your debit. Now, instead of just saying capital, we have different type of capital accounts now, and the names may be a little more fancy and a little different. So when well, the journals when you were issuing share capital, right? You're issuing shares. The company is issuing shares means that the company is getting some money from some investors. That is going to be capital for the company. So you record the money that they get in the bank, and you have to record their capital as well. Right? The interest of the investors in the company is the capital. We have ordinary share capital account if it is ordinary shares that we issue. And as capital is usually credited when we increase it, same concept, we credit it to increase it. Share premium is a type of capital account, just the same. This is where you record excess though. So what you put in the ordinary share capital account or the preference share capital account, what you put in the share capital account is the amount at the par value. The par value is the value that is stated, the stated value of the shares. And you can see it right here when they talk about the authorized share capital and they give the value of the share. However, companies may sell the shares above the par value or below the par value, more than or less than. In these instances, they were sold more than, so we have what we call a share premium account to record the excess. So amount at par value goes in the share capital account, and the excess difference in the price, the excess that you would have sold it for, the extra, as a profit, but the excess that you sold it for will be recorded in your share premium account. So both of them were similar for the ordinary share capital and for the ordinary shares that were issued and for the preference shares that were issued. As it relates to the debenture is a loan. So you would debit your bank when you get the money and you credit the liability account to show that it is something that you have to pay back for. So the same concepts apply for the journal. This is a format just the same as though you need to know the format for your balance sheet. It's just that it looks different from the sole trader balance sheet that you're used to. So you guys spend so much time practicing the sole trader balance sheet. And by the time you reach company accounts, it is almost the end of the school year, the end of the term, and it may be rushed and you may not get to fully grasp it. That's the unfortunate thing about company accounts. And it's becoming more popular now. So I'm really, 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 really advise on us that you learn it. It's a little different. If you guys move on to CAPE accounting, this will be your norm. It's like how you're used to sole trader accounts now mostly. When you reach the CAPE level, company account is your norm. You were a company. Like you don't even do sole trader stuff anymore. It's company, company, company. So it's an introduction to the CAPE syllabus to an extent. This is this capital section of the balance sheet. They ask us for the balance sheet extract, which they only wanted the capital section. So when you are doing your partnership, the capital section is a little different. When you're doing sole trader, the capital section is so different. This is how the company's capital section looks. So it's like a next format that you need to learn as well. I have a company video on YouTube. I just don't think it is public though. I need to edit it. Somebody can remember in the group later. I sent you guys the link though. Once you have the link, you can access it. But I need to make it public. As soon as I finish, I have a class right after this. So as soon as I finish that, I will make that public. And I should upload part two as well, because I think I will upload part one. So you guys can watch the company video to get a better understanding of the content since we're working a question now. So if you want to go ahead and watch that video and then come back to this part of the question when we're actually working on an example, you guys can do that as well. But I have a part two to post, and I'm going to make part one public. And if I get the chance, I can try to make another company account video. I can't promise, but I'll try my very best. All right. So again, this is the format that you need to learn for the balance sheet section. Everything else in the balance sheet would remain the same. Your assets, liabilities remain the same. It's just that when you reach the capital section, it looks a little different like this. These are some new things that you need to know. All right, and quickly wrap up. So D says during the financial year ended April 30, 2022. My God, they're quick to leave me. Bye. I'm not gonna quickly wrap up because I literally have a class right now. I'm gonna be a little late for my class, but I'm gonna just quickly wrap up with you guys. So during the financial year ended April 30, 2022, Payne Limited declared and paid an ordinary dividend of 50 cents per share and paid out the dividend due on the preference shares. For each type of share specified in the table below, calculate the amount the company paid out in dividend. All right, not too tough, easy, easy, right? So ordinary shares, they're paying out 50 cents per share, right? In dividend. Dividend is what you get, is your return on your investment. You give somebody your money, you invest, you get something in return that we call dividend. And it's paid when the company feel like. So this company is paying out 50 cents for every share. You get 50 cents. You get 50 cents per dollar, right? So it's 50 cents per share. What's the total amount of ordinary shares we have? Or issued rather? Total amount of ordinary shares that was issued, or it's in our question, not up here, it's in our workings. Where is it? Oh, it's in the question. Here, 100,000 ordinary shares, right? That's the quantity of shares issued. So for all of those shares in issue, you get 50 cents per share. If it's 50 cents per share, it's going to be 100,000 times 50 cents, which means that the company is paying out. Sorry, it's 5 cents, not 50 cents. It's 5 cents, guys. $5,000. It's 5 cents, not 50 cents. Okay, you guys see the mistake there? Alright, it's 5 cents per share. So paid an ordinary share dividend of 5 cents, 5 cents per share. So it's a total of 100,000 shares, and it's 5 cents per share. So 5 cents times 100,000 shares. Yeah, $5,000. And for the preference shares, oh guys, you suddenly if you learn company accounts, remember last year paper. Last year June paper, questions 2 and 3 were on company accounts. They had an entire income statement, appropriation account, and then more questions. Yeah, remember? hmm For the preference dividends, it works based on the percentage of the preference shares. So you realize the preference shares is stated as 8% preference shares. So their dividend is usually fixed to the percent that's dubbed with the name of the share. So it's 8%. So it's at 8% preference shares we're working with. So they're fixed at 8% on whatever amount of shares they own in the company. So the preference shares that were issued were 200,000. So the quantity 200,000. So it's 8% times the 200,000. Hold on. Oh, the preference shares were issued at $1 each. Hold on, guys. 1 second. Where's this thing that I'm looking for? Hold on. Okay, never mind. All right, here. I found it. All right, found it. So preference shares. Wrong. All right, so we issued 200,000 preference shares, right? Yeah, the quantity is 2%, 200,000 preference shares. However, and that's what I'm looking for. Where is it? Okay, here it is. All right, so we issued 200,000 preference shares, but the value of the shares, the par value of the shares is $100,000, right? So remember that the preference shares were what? It was 50 cents per share. Okay, yeah. Preference shares were 50 cents per share. So that means that when we issued 200,000 preference shares, we got in ordinary shares, hold on, in preference shares capital here, hold on, where is it? Okay, here it is. Sorry. So in your preference share capital right here, guys, you can see it would have been the 50 cents and the 200,000. I would have gotten the $100,000 as the share capital, right? Mm-hmm. The question says, hold on, I'm double checking something in this question. All right, 1 second. Okay. All right, all right, all right, all right, all right, all right. Which one was 100? Okay, the ordinary was 100. All right, okay, cool. So the ordinary was 100,000 shares. We're back. Oh no, you guys haven't learned this? Jesus. Oh god. The one here kind of very sticky. But as I said, I'm gonna try to upload a video. Oh, and I have the videos already. I just need to upload it. Yes, I'm going to upload the video. I'm going to upload the video. All right. Yeah. All right. Mistake here. Oh, I just found it and I lost it. All right. Here, I'm gonna go back to here. So the preference share capital. We would have. We will have issued 200,000 shares, yes, but remember that the par value of the shares is 50 cents, right? So the par value is 50 cents. We would have issued the shares at $1 though. So take the share capital, not the quantity of the share, take the share capital here. So the ordinary share capital was 100,000. The preference share capital is also 100,000 in terms of the share capital with that we put right here. Where is it? Oh, it's not very good. Okay, all right, it's here. 100,000 right here. So this is the issued share capital. The amount that we put in the share capital account, the amount at the par, right? Not at the market value. Because remember, some of it would have gone to your share premium. So for the share capital, for example, you realize that we would have had the 100,000 here, which is the amount in the ordinary share capital, and that's where we got this 100,000 from. Because we're looking at 100,000 shares that were issued, right? And the ordinary share capital was 100,000, so that one is fine. For the share premium, however, it was 200,000 shares that were issued, but the preference share capital is 100,000 because the shares have a par value of 50 cents. So right here should have 100,000 instead. Let me get 200 from. All right. Yes, there were 50 cents. Yeah. So these weren't the $1 shares. These are the 50-cent shares. So the preference shares are the 50-cent shares. So when you multiply the quantity of 200,000 by the 50 cents, that's where you get the 100,000 from. And that is the issued share capital right here. And it's the same thing that we had in our balance sheet right here for the preference shares, the issued capital. So the dividend is the rate, which is our 8% times the issued share capital at the par value. Let me just put that here. So the preference is the rate, which is 8% times the issued share capital at par. So that's $8,000. Did they ask us to add it? No, it's two separate columns, right? Yeah, there we go. So just put this here so you guys can see why we have the 100 and not the 200. And then, oh, that's 3 marks. And then they're asking us, I don't know why that's 3 marks. That was, oh, 1.5 each, I'm assuming. Then they'll have asked us to calculate the additional number of preference shares that a company can issue. That question is simply saying, if you look up in the question, remind us here that they're authorized to issue 500,000 quantity, right? Preference shares. How many did they issue? They issued 200. So how much left that they can issue? The basic maths, right? So authorized 500,000. That's the quantity. Issued 200 already issued. So that means that they must have 300,000 left, right? That they can issue. So the question is asking how much left that they can issue for preference share capital. Clear? What's the additional that they can issue? Because remember, the authorized share capital is the maximum shares that you can issue. And then the total value of these additional shares. Remember, what was the real value for the shares again? Go back to the value of the shares. These were what? 50 cents each, right? It's a par value that we're using. All right, so number of remaining shares. Remaining shares. 300,000 times the par value, which is 50 cents. And that is 0.5. So your answer is the 300,000 that you have that you can issue, right? Times your par value, which is the value for the share, the stated value of the share, which is 50 cents. And you get $150,000 as the amount of the value for the additional shares that may be issued. Remember that you cannot go above the 500,000 authorized share capital, and they already have 200,000 issued, so 300 left to be issued, right? That they can issue. So the value of that 300 that can be issued would be the quantity 300 times the par value of the shares, which is 50 cents per share, and that's how we arrive at $150,000. All right, guys. So yes, you guys see from today that you need to practice your company accounts. You need to watch some videos. You need to do some classes. You need to read your textbooks. You need to practice some questions. A combination of the above, all of the above, whatever, whatever works for you, whatever suits you best, right? Whatever you need. So you need to assess your needs. Please to go with your syllabus. When you're studying, check your syllabus to see what you need to know. What is required of me to know? Use the past paper questions. Don't just make up questions. Don't go to AI until AI to make one question. Give you use the past paper questions. Please, I'm begging you. Alright, so oh my god, I'm so late for my class, but this is where we end for today. Yeah, so this is where we end for today, and If you guys need further assistance, you know where to find me. If you're not in the study hub, the description, well, the link is in the chat or description, I think. If you need to reach out to me, your WhatsApp contact is also in description of this video, and the video will be posted immediately after I end it, so you guys can rewatch it if you missed anything, and you can reach out to me with any questions that you may have. If you guys need one-on-one sessions before your exam, you can contact me for such as well. Alright, so have a great night, everybody. Thank you for joining. I hope you all learned something. You are welcome. Bye. Night, everyone. Please go and study. You guys have exams. Bye bye.